Hello traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Friday, finally, the 28th day of May, and this is the Daily Report, our weekend review. Forex Gold is currently trading at 1214.33, a little bit after 10 o'clock here in beautiful Honolulu, Hawaii. We are going into the last hour and a half of our close before we shut down 5 o'clock New York time, and then we will reopen Monday morning in Australia when their market continues. We have a lot to cover in today's report. We're going to be talking about Elliott Wave. We're going to be talking about candlesticks. We'll talk about the stops that we currently have in the market, the activity we've seen, as well as my forecast and interim belief for what I'm looking for next week, all on today's weekend review. Traders, what an exceptional week we've had in the market. As I said, gold is currently trading at 1214. We have maintained this position. We, of course, entered this position on Sunday at 1285. Our stop, in fact, is still in place as the intraday low was 1201, and our stop is sitting at 1192 on a protective stop. I'm going to talk about the scenario, what I am witnessing in terms of the relationship, and the other position that we had that we took on. We did pull profits with our trailing stop this morning. Traders, I did suggest that we move our stop up to 975 on the euro dollar. We'll look at that chart in a second. But that stop was hit in trading activity when we saw these dips. So we had an exceptional trade there. Traders, we got in at 950. We got out at 975. We pulled 25 euro dollars. When you do the conversion, roughly at 1.23, you're going to get about $32 profit on that trade. Not too bad. That trade is out. That trade is history. And we are going to focus and concentrate on our long position in U.S. gold. Before I talk about our wave count, the one thing I did want to do, traders, you recall from yesterday's program, I did have some concern with this doji-like candle in a star position. It is a consolidating candle. It is a candle in which, if you're going to see a fundamental technical shift in the marketplace, you will notice it by first seeing a doji or some other consolidating candle. Today's trading activity did form a umbrella line. It's almost hammer-like hangman, and of course the umbrella candlesticks are the hangman, hammer, shooting star, inverted hammer. And I'm noticing something interesting. The first thing is, when they went to take out and try to test the highs, and of course my belief right now is resistance is sitting at 1220, and that 1220 is based upon this top that we had right in here when we had our record high. And if we extend that over, you'll notice that it pretty much matches up very, very eloquently. So for that reason, I do believe that we do have resistance there. I also have pegged support at around 1200. And what I mentioned on my report was that if it cannot take out the resistance, it will go and test support. And that, in fact, is what we saw. 1201 was our low. But here's what I'm finding interesting. If we take a look at the market's activity that it had as it made this record push up, you'll notice that it really consolidated right before doing that and right before breaching this historical high. And what it in fact did was this breathing room was a doji and then a hammer-like doji. Traders, are you seeing a similarity from this pattern here and these two candlesticks here? Personally, I think that we're witnessing some very, very similar activity, and because of that, what I think that we're going to witness is that the market will consolidate, which it has again, and then what I'm going to be looking for is for the next week to have a potential breakout back to the upside. Now, traders, where on the upside am I looking at as a potential target in the market? Now, for that, we really need to go to our Elliott wave count. What we'll see is I've added some of our Elliott wave count. We had our record top here. This was back in December 1221. That was wave 5. It begins our corrective phase. Our corrective wave A, our impulse wave B, our corrective wave C. That puts us into the new 1 through 5 count. In other words, the cycle starts all over again. So wave 1, impulse, corrective wave 2, impulse wave 3. That's always going to be the strongest of all waves. Our corrective wave here, which took us to about a 50% retracement, and then we began this final wave, wave 5. Now, as I mentioned on yesterday's report, when we look at a target area with the Elliott wave count, what we do is we focus on wave 1 right in here, and we look at the distance that it had from the bottom to the top. It was about $100. If we then take that $100 move, because wave 1 and wave 5 are supposed to be equal or close to in length, and we take 1166 at $100, we get 1266. So traders, my projection for our upside target on wave 5 is 1265. We'll look at that area. Of course, we've got to go out and take out that 1248, that one top we had. But Elliott Wave was pretty good in predicting. I called that top to be right around 1246, so I was off by about $3. That's pretty close. So if we maintain that kind of Elliott wave count that's holding true, we do have a good upside target, and we've got a significant amount of room left to the upside in this market. Traders, we are wrapping up for the week here. It is slowing down, trading at 1214. We had an exceptional, I repeat, exceptional week here in the marketplace. We saw a major move. More importantly, I think that by the use of A, Elliott Wave, B, candlesticks, and C, Fibonacci, we were able to, on Friday's report, call a potential bottom right in here, and on Sunday's report, actually enter the market. As I said, we got in at 1185. It's right at the bottom. Technical traders, we can't ask for better signals than that. We have seen the market carry through, move substantially higher. We are still maintaining our long position. Our stops should be remained in place. Traders, leave your stop in U.S. gold at 1192. We did, of course, get stopped out and pull profits in the euro dollar, in at 950, out at 975. The market has moved higher off of that, but it does remind me of a story I've had to have mentioned to you at least once or twice before, and that's Herbert Hoyle, one of the most renowned stock traders in the U.S. back in the 40s and 50s. When interviewed, he was asked, what does he attribute to his success? He paused and then simply said, I think it's because I always sell too soon. This has been Gary Wagner with WFGForex.com, your daily market update for Forex Gold. Wishing you a great weekend, and as always, good trading. We'll talk to you on Sunday for next week's daily review. Bye-bye.